Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The focus of my presentation is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step of my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups for entries and exits. And on-topic questions and comments are welcome, and I will be watching both the Options-Doug chat channel in Discord and the chat in YouTube for your questions and comments. All right, let's get started. I've got a lot to cover today, and of course, the first item on the agenda is news, economic data, and the events today, and the big event today, FOMC. Then we'll go through our positional analysis, and then if we have time before the FOMC announcement at 2 p.m., we'll go through some setups, and then finally at 2 p.m. we'll switch over to the S&P 500 and watch that after the announcement. All right, so first of all, again today, the big news, big event for the day is the FOMC announcement at 2 p.m. and then the press conference begins at 2:30. So just we've been looking at this from time to time. This will be the last look before the announcement. This is the current Fed funds target rate at 450 to 475 basis points. And note that the market is pricing in a 13.6% chance of no increase, of maintaining that current level, and then an overwhelming 86.4% chance of a 25 basis point rate hike to 475 to 500, and that has been shifting higher and higher over the last few days. So right now it looks like an overwhelming probability. That's what the market is pricing in for a 25 basis point rate hike. And then just briefly, jobless claims tomorrow and durable goods and PMI data come out on Friday. All right, let's go through our positional analysis now. So let's take a look at charts. This is the Bookmap S&P 500 ES futures. And before I dig into this chart, let's take a quick look at a larger time frame. So this is SPX in a 20-day, 1-hour chart showing the key levels here. So this is just showing price and Spotgamma levels. And these levels are provided to subscribers for a variety of platforms in different types of notes. This is a ThinkScript that's provided to Thinkorswim users. and showing the key levels here. This is the put wall, the strike with the largest net negative gamma, and that can be expected to act as support. And then here's the volatility trigger at 39.80, and that Spotgamma's proprietary gamma flip level, indicating that market makers' position on the gamma curve is negative below this level, indicating they will need to hedge with price to hedge their delta exposure. And then above, they can trade against price to hedge their delta exposure. So that's at a typical of a positive gamma environment above and negative gamma below. And then here is the 4,000 level. That's the key gamma strike or absolute gamma strike. The strike with the largest absolute gamma, and that can be expected to act as resistance, support, or a magnet for price. And then finally, here's the call wall at 40.65, and that's the strike with the largest net positive gamma, and that can be expected to act as resistance. So that's the SPX in a 20-day, 1-hour time frame. Let's take a look at another Thinkorswim chart just showing price action for today. And this is a 1-day, 1-minute chart showing the same levels. Here's the volatility trigger at 39.80, the 4,000 key gamma strike, and then the call wall is on up above. And note the price rotation up and down around the 4,000 level. So it has acted as support, support, and here resistance, and potentially resistance again. But price is oscillating and rotating up and down around that level. All right, let's take a look at Bookmap now. And I'm showing the same levels on this chart. And I have 2 columns of notes. This is the Spotgamma cloud notes. These are provided to Bookmap users that subscribe to Spotgamma. This is showing the SPX levels that I just talked about. There's the 4,000 level and the 39.80 volatility trigger. And note that Spotgamma is using a 40-point difference between ES and SPX, and I calculated that earlier today at 33 points. So I'm showing kind of revised levels in my cloud notes column here, the C levels, and I'm showing there's the 4010 level that was noted as a resistance pivot level, and then there's the 4,000 level, and note my level is 7 points below the Spotgamma level, and I think this is closer to the reality, the real level. And I'm also showing key SPY levels, and that is the 400 SPY key gamma strike, and that's also the volatility trigger for SPY. So I think it's important for anybody that trades any form of S&P 500, ES futures, SPY, SPX options, to keep track of all these levels. And again, today this is showing how this 4,000 level has been in play, support and resistance. And I'll talk about setups in just a few minutes. So let's talk about shifts in levels now. And the levels that I keep track of: the volatility trigger, the 0 gamma level, put wall, call wall, and key gamma strike. So for the S&P 500, the volatility trigger did shift higher for SPX and SPY. And for SPX, it shifted higher from 39.55 yesterday to 39.80 today. And for SPY, that level shifted higher from 395 yesterday to 400 today. And then also for SPY, the key gamma strike shifted higher from 390 yesterday to 402 today. And then finally for the QQQ, for the NASDAQ, the call wall did shift higher from 310 to 315. So I take all of that as bullish. The shifts higher in those levels. Now, of course, that is, that's before the open, not accounting for what's going to happen after 2 p.m. All right, let's take a look at the gamma charts now, and we'll see where those levels come from. This is the S&P 500 showing absolute gamma levels. This is the zero line, and above that line, that's positive gamma, or call gamma, shown by the black bars, and below that line, that's negative gamma, or put gamma, shown by the teal bars. So this is showing the 4,000 absolute gamma strike, or the key gamma strike, the strike that price has been oscillating around today. As that's pretty obvious. That is the strike with the largest absolute gamma. And then down below is the put wall, the strike with the largest net negative gamma, and that can be expected to act as support. And then here's the 4065 call wall, the strike with the largest net positive gamma, that can be expected to act as resistance. And note that is the short call strike of the JP Morgan collar that expires at the end of this month, March 31st. So that's SPX. Let's take a look at SPY. Again, the same configuration, zero line, positive gamma or call gamma above, and negative gamma or put gamma below. And again, remember the key gamma strike has now shifted up to 400. So that's the strike with the largest absolute gamma. And the put wall is at 390. And that's pretty obvious, the strike with the largest net negative gamma. And then the call wall remains at 402, strike with the largest net positive gamma. And note let me just go back to the SPX. I want to point out one thing is what appears to be a slight build in call gamma above the 4,000 level, but still the dominance of put gamma below the 4,000 level. Let's go back to SPY and note the dominance of put gamma below the 400 level. All right, while we're on this page, let's take a look at the combo strikes. And this is showing combined gamma for SPX and SPY and converted into an equivalent SPX number. And again, call gamma or positive gamma above and put gamma or negative gamma below. And let's see if we can find the volatility trigger. And I believe it's right around here. So this is the gamma flip level. And you can see it's pretty clear on the chart with call gamma or positive gamma above and negative gamma or put gamma below, and that's the 3980 level. All right, so those are the combo levels, and JEC confirms those combo strikes lining up exactly where we're seeing competitive trading levels. So these strikes are important. All right, that's the S&P 500. Let's take a look at the NASDAQ now. And for the NASDAQ, we'll just look at QQQ. NDX is not significant. So again, positive gamma or call gamma above the zero line shown by the black bars, and negative gamma or put gamma was shown below in the teal bars. And QQQ for QQQ 300 is the key gamma strike, and the put wall remains at 285, and then the call wall moved up from 310 to 315. So note the dominance of put gamma below the 300 level and call gamma above that level. And 304 is the volatility trigger for QQQ. Well, let's take a look at data now. And I'm going to focus on the gamma notional. This is market maker's position on the gamma curve for SPX in the far left column, SPY in the middle column, and QQQ on the far right column. And notice that these numbers are negative for the S&P 500, both SPX and SPY. And again, this is market maker's position on the gamma curve. In a negative gamma environment, this means that traders are long puts, market makers are short puts, and they have to hedge in the direction of price to hedge their delta exposure. And then in a positive gamma environment like QQQ, that means that traders are short calls. That's Spotgamma's assumption for an index. Traders are short calls and market makers are long calls, and they have to hedge against price or trade against price to hedge their delta exposure. And these numbers have shifted higher from yesterday, or become for the S&P 500 less negative. So yesterday, gamma notional for SPX was minus 305, and today it's minus 75. And yesterday, gamma notional for SPY was minus 1530, and it has become less negative to 1033, minus 1033. And then yesterday for QQQ, gamma notional was minus 56, and today it is 115, positive 115. So the way that I interpret this is there is less gamma notional to fuel a potential put Vanna rally, and also supporting that is the, let me get rid of that line, that rectangle, is look at the large drop in VIX. It's gone up a little bit today, and there's a pretty lengthy discussion in the last few Spotgamma AM Founders Note about the VIX expiration and the impact that would have on the market and trading. But the thing to note here is this is so this dark area, this is Wednesday during the regular trading hours. This is Tuesday, and then this is Monday. So this drop started pre-market before the RTH open on Monday, and there's just been really a continuous drop in VIX. So again, I'm just interpreting this as a potentially traders have pulled forward their any rally based on what the Fed's FOMC announcement and press conference, but could be wrong. But there's still some put Vanna in the tank. So let's take a look now at the Vanna charts, and this will illustrate what I'm talking about. So this is the SPX, and this is pretty neutral, just slight shift higher from right to left, showing that market makers will need to hedge in the direction of price, or hedge sell futures as price drops, since their delta notional is increasing. And that's shown by the green curve here. That's the current expiration, showing how their delta notional changes with changes in implied volatility and in price. And that's the Vanna effect, the change in delta with the change in implied volatility. And then the black curve is showing the change in delta notional as time passes. And that's the charm effect. So pretty neutral for SPX. Take a look at SPY, and recall that SPY gamma notional is significantly more negative than SPX. So this is showing a lot easier to see that market makers will need to sell futures to hedge their delta notional, shown on the vertical axis, as price drops, and then as price increases and implied volatility drops, they can buy back their short futures. And here's QQQ, and this is slightly shifting the other way again in a positive gamma environment, but overall pretty neutral. All right, finally, let's take a look at my key gamma strike list. These are all the stocks on my watch list, mostly large cap tech stocks. And I track the key gamma strike every day and compare it with the key gamma strike from the previous day. So the key gamma strike from yesterday is shown in the E column, and the current key gamma strike is shown in the D column. And I color code these, green indicating that there was an increase in the key gamma strike from the previous day, as shown here for AMD, also Snowflake, SPY, and Tesla. And then red indicates a decrease in the key gamma strike, shown there for VIX. So overall, interpret this as bullish, of course, with the FOMC caveat. All right, let's take a look at some setups. And in YouTube, Floyd's Garage asked, does RTY or IWM agree as well? And I'm sorry, I don't have RTY or IWM up in Bookmap. If we have time, we'll take a look at Hero. But I'm sorry, I don't really follow IWM. All right, so I've got about 6 minutes left. Let's take a look at some setups. So first of all, I'm going to take a look at the S&P 500. This is Hero, Spotgamma Hero, and this is showing the hedging impact of real-time options. That's what Hero stands for. And it's showing options trades, market maker hedging activity. And this chart is for the S&P 500. It's a combined signal of SPX, SPY, and XSP. And XSP is insignificant compared to SPY and SPX. Okay, I'm going to zoom in on this chart. And again, this is showing options trades, hedging impact, and this is showing how options traders were trading today. And note, Hero is moving down. So traders net overall have been taking so far today negative delta positions in the S&P 500, SPY, and SPX. And let's just take a look and see what they're doing. And this is separating calls and puts. And notice they're buying puts, and then they have started buying calls. So the puts, the lines are shown in terms of delta, and buying puts is negative delta, so this put line is sloping down. And the orange line is for calls, and again, in terms of delta, traders are buying calls, and that's indicated by the rising orange line. But net, when you compare the notional values here, minus 400, and just can't get too close to the edge there, minus 430 million versus positive 327 million. That nets out to a total of around minus 109 million. So slightly negative, and that did set up a very nice short in the S&P 500. I like to look for these divergent setups. So hero is dropping, price is rising, jumps up, and sets up the short right here. So let's go take a look at Bookmap. So there's the short in the S&P 500 futures, just below the 400 key gamma strike. And then there's the second short entry. All right, let's take a look at a couple of other things here. Note the rising orange line there, that is a stop run, helping to fuel that move higher. And note that large traders were fading that move with iceberg orders, shown by the falling light blue line there. So iceberg orders are orders that larger traders use to hide their size. So that's a pretty typical setup looking for a short. Stop run into a level, larger traders fading that, then just look for a lower high to enter. All right, so that's the S&P 500. Let's take a look at SPY. And here this is showing the same idea here. All these green dots showing a buy sweep up just below the 400 key gamma strike. And then I'm also showing here how the 4,000 level has acted as support and resistance. And now SPY is, the S&P 500 is trading right around that 4,000 level. All right, we don't have any more time for setups here. Let's go back to the futures. I've got less than a minute until the announcement. So we'll wait for that. And I'm gonna pop up CNBC on another computer, another screen while we wait. So just a few seconds left. All right, it's 2 p.m. All right, so it looks like the consensus was correct with a 25 basis point rate hike. We'll zoom in on this a little bit. We'll give it a couple minutes and then we'll take a look at and see what options traders are doing. So to see all the movement, we really have to zoom in here like Bruce does at looking at 30-second time slices here. All right, so of course, they have the rate announcement and the statement. CNBC indicates some additional policy firming may be appropriate. So it looks like the interest rates are dropping, both the 2-year and the 10-year. And the Fed indicates recent developments, indicating additional credit tightening. Tighter credit will weigh on the economy, activities, hiring, and inflation. And the year-end funds rate projection at 5.125%. All right, let's take a look at Hero and see what options traders are doing. And I'm going to change this to a much smaller look back. Here, let's try that. So now I'm just looking at the past 5 minutes of data in this rolling window. So far it looks like a very strong correlation between options trades, hedging flow, and price action. The Fed indicates inflation remains elevated. Banking system is sound and resilient. And let's go back to the futures now. note price heading up towards the 402 SPY call wall. And there's a comment in YouTube. Sorry, I don't know how to pronounce your name. Hello, I'm glad you follow me. Ajar. Hello again. Glad you follow me on Discord. Glad you're here. Let's take a look at the VIX and see what volatility is doing. And so now, as expected, and we'll just zoom in on today, volatility is dropping. All right, we'll watch this for a few more minutes, and then maybe take a look at some other instruments and some setups from this morning. If anybody has any other ideas, let me know. Just let me know what you want me to do. Let's take a look at Hero again and see what options traders are doing. See if that can give us any clues. So now looks like they're fading this move. So they've been buying puts, and this is just for the last few minutes. Buying puts, starting to sell calls. And it looks like these put buyers, the put Hero, has been a little bit of a lead on price falling. A little bit of a leading indicator. And one thing that I always point out, I have two screens, so I don't have to jump back and forth between Hero and Bookmap. I'm just watching both simultaneously, but here in my presentation I can only show one screen at a time. So that does make it a little bit clunky for the presentation, but for trading with two screens it works just fine. Let's go back to Bookmap now, keeping in mind that option traders for the last couple of minutes have been fading this. And note this shift in order flow here in Bookmap. See all the green dots there, market buy orders up just below this 402, SPY 402 call wall level. And then the shift in order flow from bullish to bearish. You can see the pink dots coming in there, market sell orders. And then this 400 key gamma strike right now appears to be acting as support. Some green dots coming in, may not last. And an additional clue for this drop was these iceberg orders. Not large in size, but traders, larger traders, were fading that move with sell iceberg orders. So this drop here was a pretty clear read. Options traders buying puts, the shift in order flow from bullish to bearish, and then larger traders fading the move with iceberg orders. Let's go back and take a look at Hero. We'll separate out puts and calls again. So now it looks like they're starting to sell puts and buy calls. Let's go back to Bookmap. So price is responding higher. And notice how larger traders are so they're selling strength, start buying weakness as price falls. And in order to see a rally, I typically want to see this yellow line, stop orders rising. That's often a very good indication of direction. Let's go back and take a look at Hero. Often any divergence in Hero can take quite a while to play out, minutes to hours. And keep in mind, I normally don't look at a time frame this short. I look at the signal for the entire day. So it looks like price may be heading back down to the SPX 4000 level that has been such an important level today. All right, anybody have any opinions? I've got about 15 minutes late. We can continue left. We can take a look at continue watching the S&P 500 here, or we can take a look at some setups and some other instruments. Anybody have any thoughts, opinions? All right, I don't see anything. I'm going to take a look at some other setups. So let's go back to Hero now. And so we've already looked at the S&P 500 and the setup from this morning. I want to take a look at AMD. And recall, AMD was one of the stocks with an increase in the key gamma strike list from 90 to 100. Let's go take a look at Hero now. So there's AMD in Bookmap. And I'm going to change this back to what I normally use is the 1-day look back period. Close this. Let's take a look at AMD. And here's what I saw this morning. And I'm going to look at puts and calls separately and showing the call buyers. Buying calls from the open, price responds, or price follows. All right, so in YouTube, Bartos says we got to wait for the Jay Powell conference for the real move, and yes, so that's often the situation, and I will be signing off just as he starts. So my webinar ends at 2:30. So that's while we're waiting on that, I'm just going to take a look at some setups from this morning. So here is AMD. Let's go back to Bookmap. Nice strong uptrend. Note all the green dots here, market buy orders driving price up to the liquidity at the 99 level, then a pullback to 97, and then a move up to the 100 call wall key gamma strike at 100, and notice all the liquidity at that level. That tends to attract price. And so far the call wall is acting as resistance as expected. So great long setup in AMD this morning. Let's take a look at Microsoft. And another long setup. And recall, Microsoft has been weak for the last couple of days since it ran up so much last week, and now it looks like traders are in, buyers are in Microsoft again. Let's take a look at Microsoft. Strong correlation between hedging flow and price action. Note the rising hero line here, and price responds. Let's go back to Bookmap. Microsoft, a double bottom here at this 273. Note all the green dots here, aggressive buyers here, and then price jumps higher up past the 275 level, the high liquidity at that level, straight to the 277 level, then chops around lunchtime and now is moving higher to the 280 level. And in question, Bartos asked, do you trade options or futures or both? I do trade both, but when this is just me, when I trade stocks, I primarily trade shares. I don't like to, I learned to sell, I learned to sell options. That's how I learned to trade options. So I'm a seller of options. I go for the high probability trades. I just can't deal with buying something that is losing value over time. And then I generally prefer to trade stock these days. There's only so much that I can do in a day, and I think there is so much opportunity in stocks, and Spotgamma Hero and Bookmap provide such an edge that I don't like to be confined to trading just the S&P 500 futures. So I have my stock trading platform up, and if I want to trade the S&P 500, I can trade SPY shares. So that's how I trade. So day trading is primarily stocks with shares. All right, so that's Microsoft. Let's take a look at NVIDIA. So note that all of these stocks that I've talked about today have been in play. In play for quite some time, actually, for several weeks. AMD, Meta, Microsoft, NVIDIA, and Tesla is always in play, always moving around quite a bit. So really nice move in NVIDIA today. I'm going to zoom in just on this early move higher so we can see this opening here. Note the shift in order flow shown by Bookmap here. Pink dots, and then showing the market sell orders right at the open, and then the green dots come in. And with market buy orders, and price moves higher. Let's take a look at Hero now. Go to NVIDIA. Note the strong Hero signal here. This is showing, oops, wrong tool. This is showing how Hero compares the Hero signal today with the last 30 days. That's shown by the entire length of this slider here. And then also the last 5 days. That's shown by the colored portion. And note the dot here is on the far right, indicating the Hero signal today is almost as strong as it has been in the last 5 and 30 days. So that is a bullish signal. So let's go take a look at NVIDIA now. And strong correlation between hedging flow and price action. Separate out puts and calls. And notice mainly calls driving. Traders are buying calls, shown by the rising orange line. And RJ, you're welcome. And he asked in Discord, would you ever sell options for any of these stock setups or buy options? And right now my answer is no. So first of all, I trade options primarily on the S&P 500, S&P 500 futures and SPY, and also SPX. So I trade options on all of those instruments, the S&P 500. And again, I may trade butterflies on SPX and sell strangles on SPY and S&P 500 futures. I generally don't trade options with stocks. I just don't. I have an edge with the S&P 500. That's what I know how to trade. I've considered buying options on stocks, but I just can't see. There are some advantages and disadvantages. Um, I think the advantage is you can just buy, buy a put, buy a call with the shortest expiration, and not have to worry about a precise setup, and just let it play out. If you have a good feel for direction, but you don't want to sit there and watch the chart and time your entry precisely. So it's defined risk. You can buy an option and then just move on to the next instrument, next stock. But for right now, I'm buying shares, buying buying or selling shares for stocks, and then trading options on the S&P 500, futures, SPX, and SPY. All right, so great setup here in NVIDIA. Call buyers, and this is what you want to see if you're bullish on a stock. This means that traders are buying calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. And as price continues to go higher, they have to continue to buy stock to hedge their delta exposure, since they're selling the calls. So that's NVIDIA, and let's take a look at Tesla, and then we'll take a look at a final look at the S&P 500. So here's Tesla, a pretty choppy day. I thought much better trades in AMD, Microsoft, and NVIDIA, and of course the S&P 500. So let's go back to Bookmap now. We can take a quick look at Tesla, and then we'll go back to the S&P 500. And one thing to note here on Tesla is the call wall has acted as expected resistance right at the open, and then right after the announcement. All right, let's go back to the S&P 500. Watch that for a couple minutes, and then we'll wrap it up. All right, so a quick move up, then down. And volume concentrated in this chart range here around the the ES 40-50 level, and then also at the SPX 40-10 level. So after 15 minutes after the announcement, just chopping around, I guess waiting for the press conference. All right, I'm going to wrap it up. That's all I have for today. So we saw the announcement, saw the reaction. Let's just take one quick look at a hero, and then we'll, for S&P 500, then we'll call it a day. Let's just zoom in, and now I'm just looking at the entire day rolling window, look back period, and so far it looks like overall, oops, wrong tool. Options traders are taking negative delta positions. All right, that's all I have. I want to thank everyone for watching, for your questions and comments, and I will see you tomorrow. Thanks again. Bye.